If you haven't been paying attention, the market has been setting records and trading at all-time highs, and we just had some red days last week too. The week ahead in this market seems to be just as exciting. So what is going on today in this week? Well, this week, we have a very busy earnings week. Not as busy as past ones, but there's some big companies that I do want to sit there and focus on. Lowe's, Target. These are two companies. I own Target. Again, don't ever own a company because I do. But I'll be interested to see what are their same store sales like? Because we keep seeing that the consumer is strong. And I do think the consumer is stronger than some people are saying, but I also don't think it's as strong as a lot of people are saying. This will really help drive where people are. Nvidia, big earnings, because Nvidia has been the driver of this market for quite some time. Now, I put a poll out on Twitter recently. This is the Twitter poll I put out. Nvidia reports this week, SMCI, one of their biggest customers, having major issues. What will they report? 63% of people said beat revenue and EPS. And actually, it's more than 63% because 12.8% just want to see the results. Only 11% put miss rev and EPS both, which I think they're going to beat on both. They do a pretty good job, I'm sure, of tempering expectations so that they can beat. Another company I want to look at, TJ Maxx. Is this telling me people are saving? Ross stores. Are people trying to save money? These are very, very important for me to understand. I'd be interested to see Intuit. What are they saying about small business owners? Are they selling more than expected? Intuit is the maker of QuickBooks, a phenomenal small business accounting software. These are kind of things I'm looking at. Now, guys, as you know, I don't care much about what these companies actually do in the short run. But it'll be interesting to see about where the economy is based on some of these reports. Today, not much reporting today that actually looks interesting to me. Actually, zero reporting. But again, I missed this one. Walmart, big one tomorrow. So guys, we got Walmart, we've got Lowe's, we've got Target, we've got Nvidia, we've got Ross stores, we've got TJ Maxx. John Deere will be another one about big, because John Deere is expensive. So if the consumer and the economy is doing well, they're going to sell more stuff. These are the things that you have to get a look at. Now remember, no matter what these companies report, I do not encourage you to change your investing decisions based on that. That is not the goal here. The goal of what we're trying to do is sit there and evaluate what's going on in this economy and the world from a long-term perspective. What's going on with the markets right now is we're at all-time valuation highs. Even with Friday's big sell-off of 2.25% for the NASDAQ, we're still at historical highs. Only 3 times in history has the 10-year PE ratio been above 30. 2000, 2022, and right now. And all those times ended up with some sort of bear market for a short period of time or a deep one. Now, does that mean that it's going to happen again? I imagine that the next 5 or 10 years will not be like the last 5 or 10 years. But when that will happen, I have no idea. And the other thing to remember is, if you bought the QQQ, the NASDAQ 100 ETF at the peak of the 2000 bubble, and you dollar cost average all the way until today, you made 13.5% of your money after absorbing an initial 83% drop. That is the big key of what we're trying to teach here. If you have an outlook of 5 or 10 years, just be ready for some sideways movement and a lot of volatility, sideways overall movement. If you have an outlook of 20, 30, 40 years, don't even think about it. Your goal here is to dollar cost average into low cost ETFs. And if you choose to buy individual companies, buying great companies at great prices, which you can do. The difference is you got to pay a premium for a great company. So guys, some Fed governors who are speaking, Bowman, Barr, and Goolsbee, they're speaking this week. People are going to go hang on every word they say. There's different views out there about what should be done in the economy. Now, last week, Powell came out and said, hey, the economic data is showing us that we probably don't have to be as aggressive as people may necessarily believe because economic data is looking pretty good. Remember, we cut rates to spur economic growth. If we're having economic growth and we have a strong labor market, there's not as much reason to sit there and cut rates. But of course, everyone likes borrowing at lower rates, etc. My personal bias is I love having higher rates. I think true investors showed their abilities during tough times, and higher rates mean it's harder to find great investments. We're in the real estate business. We own 1,000 apartments and we're growing. When rates were 3.5%, it was very difficult to find good apartment deals. The second rates went up, oh my gosh, we went from being told you're 20 or 30% off from buying this apartment building to all of a sudden being in the final group on 6 or 7 buildings. And we ended up buying 200 units about 4 months ago. And we're in the process of buying 40 more units here today, a total acquisition price of $30 million between the two. So I look at this thinking, I want everyone to be that kind of investor. I want somebody to be the investor where they look forward to the tough times. They get excited. Our community here was lighting up on Friday from people's excitement from down days. When COVID was happening, there are pictures of me on Instagram kissing the screen because of these massive 7, 8, 9% down days. I don't think we ever hit 9%, but you get my idea. Now, I'm not sitting there as this psychopath who wants bad days just so everybody can suffer. No, I want it so I can go put money to work because I believe that the U.S. economy will be bigger and better in the next 10, 20, 30, 40 years and beyond. So as long as I can pay a reasonable price for the companies and the stock market in this economy, I will probably do well as the economy grows. That's the big thing. Now, guys, a name that's absolutely crushing it right now is Tesla. They're up another $22 today, 7%. Just 1 month ago, guys. Look at this, 55% in the last 1 month, three months, 55%. Last 6 months, almost double, guys. Year to date, up 38%. Why? Because Elon supported Trump. Even though Trump came out originally was kind of anti-EV, but everybody loves that Elon's supporting Trump. And now that Trump won, Tesla is absolutely skyrocketing. Is it validated? I don't know. I was in the car the other day with a friend of mine. We were driving. He said, man, Tesla's killing it because of Trump. And I'm like, yeah, stocks are a voting machine in the short run. He goes, what does that mean? I said, well, what's popular is going to go up. What's not popular is going to go down. But in the long run, the fundamentals will go up. And guys, this is somebody I know who actually took a company public 20 some years ago. And I was explaining that to him. That's not a knock on him. It's just to say that this is a very wealthy individual who didn't know about the short-term gyrations of the market and the fact that in the short run, what's popular will go up and what's not popular will go down. What our goal here is to teach a process that you can sit there and look at companies on a long-term perspective. And these quarterly results are fun to watch. I like looking at them. I like watching them. I like getting the information the companies are doing. But it's very important to separate yourself from the short-term noise to make a long-term decision. And this community is a great place in which I go in there, see what people are saying. We have very active analysts in there. We have very active users in there. And not only that, I personally use the tools here that I've created in order to be able to do all this analysis. Because if I'm grounded in the numbers, and I have a story there that I understand, it's just about waiting for the numbers to match the returns for that story. The stories are great. The stories are wonderful. But remember, you look back at the S&P. You look back at when the S&P goes back, all-time max chart. You wish you'd bought here. 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 Guys, the stories were always bad. Bad. And guess what? Those are the times you look past and say, I wish I'd bought there, 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 and there. Every past bear market or crash looks like an opportunity. Every future one looks like a risk. When was the story the rosiest? Here, 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 maybe here. Now, again, this doesn't mean that you sit there and try to time the market and sell everything. No, it just means get ready. And the good news is, like I said, if you dollar cost average here all the way down, did it all the way up on the S&P, dollar cost averaging, you'd have made 10.5%. On the highly volatile and overvalued NASDAQ, you'd have made 13.5% dollar cost averaging. And over time, that's assuming you kept the same amount of money invested over time. Guys, from the NASDAQ peak right here, let's go pull up QQQ because it's very important. Look how long it even took QQQ to even get back to this point. It hit an all-time high of $107, $120 back in March of 2001. $120. When was the next time it was at $120? I'm going, 120, 120, 120, waiting. There it is. December of 2016. So from March of 2000 to December of 2016. By the way, you know what happened at that time? LeBron wasn't even in the NBA, And he brought the Cavs a championship to Cleveland after going pro, leaving Cleveland, going to Miami, winning 2 titles, coming back to Cleveland, going to the finals, losing, coming back the next year, being down 3-1 to the Warriors, and came back and winning. And in this time also, the Indians went to the World Series in that time. In all of that time, guess what? The NASDAQ was even. And guess what? If you dollar cost average all the way over here, you'd have made a lot of money. And that's important to understand that. And I don't know what's going to happen in the future, but what I do think is going to happen very likely is that it's going to be a tough road. So if you want to be able to surround yourself with like-minded people who sit there and understand that this is a long-term journey, because remember, if you're not around people, you're going to get your own thoughts going and you're going to go into a rabbit hole. I've been there. I've made stories up in my head that caused me to make bad decisions. That's why I created this community. I wanted to lessen the number of bad decisions we make. I want to remind ourselves of these things as time goes on. So if you want that, guys, if you want to join the community, use all the tools to make better decisions and sleep better at night, click the link in the description below, everythingmoney.com/sign up. It's $7 for 7 days. You're going to get all of these tools and the community. Invest in yourself. This is the way it works. Guys, signs of excessiveness and extremism. Here are top signs, here are bottom signs. During the bottom, I'm not saying the exact bottom, around times we're close to the bottom, very low number of mergers and acquisitions, very limited IPOs, no new money from venture capital. I still remember in 2001 being in college and asking a kid, he had a great business idea. I said, have you talked to venture capital? He goes, are you kidding me? They don't want to talk to anybody right now. He wasn't right, but the point is, just 2 years earlier, he would have gotten every meeting he wanted. 2 years later, much lower. Low price to sales and enterprise value to EBITDA. Many companies trading below book value, low PEs, central banks ease for 6 to 12. I don't know about that one, but all of these negative bottom signs, do you feel any of those right now? None of these happen right now. Credit only available to high quality borrowers. Everybody can get loans right now. Now, signs of extremism, large number of IPOs, rapidly rising prices, excessive leverage, availability of credit, over-optimistic front covers, newspapers and magazines, very high trading volumes, historically high PE and EBITDA multiples, art and luxury markets booming. I'll put in there Bitcoin. Financial press, financial TV become the favorites. This time is different, declared. How many times have I been told that lately? Amateur investors move to equity asset class. Innovation leads to euphoria. Anybody heard of AI? And social proof leads to hurting. Guys, which one are we at right now? Which one? Again, do not sell because of this. But if you don't see that we're in this one as opposed to this one, I'm not going to do you any good. And you need to unsubscribe from my channel and you need to move on. There's nothing I'm going to do that's going to help. We're right now over 100% overvalued on the 2 most reliable indicators of stock market valuation. It's so tempting to pause investing when we are trading at all-time highs in order to wait for stocks to fall. But guys, no one can time the market. No one can predict the exact top or bottom. You can't afford to stop investing either. I can afford to because I got 1,000 apartments and 8 businesses upstairs, so my net worth goes up every year no matter what. But if you're thinking about waiting for stocks to fall, I made a video right here that'll help you invest in the current market and develop the correct habits as an investor. And you couple that with joining the community, you are going to be a much more successful and happier person. Thank you for your time.